Hey everyone, welcome back to another GME video. It was a wild week last week, and I'm sure everybody's wondering where price is headed next, and in this video I will do my best to break that down. If you're wondering where I've been on Twitter, my account has recently got suspended, unjustly, of course. I didn't do anything wrong as far as I know. The reason for the suspension was impersonation. I don't believe that I have impersonated anybody, but all my appeals to Twitter have been unsuccessful. So if you would like to find or follow my new account, it's just J Roland with an underscore at the end. All right, so jumping into the GME video, I'm going to take you guys for a little throwback here. As you can see, this chart dates back to all the way to 2013, actually. And you'll see why I'm going to do this shortly. But for now, just come along this journey with me as we kind of dive deeper into the past, into GME's past, what happened when the January 2021 sneeze occurred, and what we can expect next. So you'll notice that this big breakout for GME all the way back in 2012 started when price broke above the monthly trigger here, which is this thick whatever color this is, this line. You can see here, trigger monthly. The kind of aqua color is trigger weekly, and the blue is the daily trigger. And you can see that once price was able to break above the monthly trigger here, price was about 571 at the time. The daily trigger was able to cross above the monthly trigger, and then the weekly trigger was able to cross above the monthly trigger, putting GME in the most bullish trigger orientation. And of course, everyone knows the monthly trigger is an extremely powerful acceleration level. And so once price was able to break above and confirm the breakout by getting its lower time frame triggers to cross above the monthly trigger, price was able to start exploding higher up to 14, almost tripled in price. Now, we went through some pinning action, not much going on here, but the monthly trigger was holding support. Price had a nice weekly trigger, monthly trigger airplane right here at 9 and was able to pop up to 12. And then eventually, on a bad earnings, apparently, price gapped right back down below the monthly trigger. All right, it didn't look too bad. But point is, the daily trigger and the weekly trigger crossed below the monthly trigger. And GME went through a nasty period from about 2015 all the way to 2020, about 5 years below the monthly trigger. The weekly trigger and the daily trigger were below. Price was in the most bearish trigger orientation and got absolutely crushed from $9 to a low of 68 cents. Now, of course, when the stock got popular again, retail started buying. Price then once again broke above the monthly trigger. And the difference between the acceleration here and the acceleration here is simply because there was just a lot more shorting going on during this time period. And so funds that are short a stock always have a breaking point where they're going to cover, and that's usually going to be the monthly trigger, or smaller funds will cover with the daily trigger or the weekly trigger. And besides that, the monthly trigger represents kind of an emotional level, emotional battleground, where once price breaks above, human emotion starts taking over, people start to buy, and FOMO drives price higher, along with the fact that momentum-based algos will jump into a trade once price breaks above the monthly trigger, and again, cause a lot of buying and push price even higher. So monthly trigger looks a little whack here because of the huge price jump, but here's where price broke above the monthly trigger, got the daily trigger to cross above, got the weekly trigger to cross above, and once price confirmed the breakout, of course, we all know what happened next. And you can see just how strong the velocity was behind this move, as dictated by the highlighted region around the triggers. Very strong move, and once price pulled back and came back to reality, it was able to hold above the weekly trigger for a while. Once it lost the weekly trigger, sold down to the monthly trigger, where there was a lot of pinning. And then unfortunately, in about November, December 2013, price lost the monthly trigger, the daily trigger crossed below, the weekly trigger crossed below, and GME was back in the most bearish trigger orientation, just like we were throughout this 5-year period of pretty much mostly downside. Of course, there was a few pops along the way. So you can see a really strong bounce here that got rejected at the weekly trigger, another really strong bounce here that got rejected at the monthly trigger, another really strong bounce here that got rejected near the monthly trigger. So about 3 powerful pushes higher that all were rejected at the monthly trigger, where funds likely reshorted and currently GME was pretty much doing that same thing. And so the question that's, of course, on everybody's mind here is, GME rejected the monthly trigger here, GME rejected the monthly trigger here, GME rejected the monthly trigger here. Is this just going to be another rejection of the monthly trigger, or will price finally be able to break above? And you can see if we just break down what exactly happened on Thursday, Friday, we just zoom into the finer detail. You'll notice that the GME price explosion was simply a trigger-based move. Now, when you're watching GME for 3 years, every single day, if you guys, if you have jobs, if you played sports, if you do something for long enough, you start to understand it a lot more. And tracking GME for 3 years taught me one thing, which is price does what it wants. At the end of the day, it's not exactly a stock that one can forecast, but price will always respect triggers because GME is, highly shorted stock, and funds are going to cover at certain periods when price breaks above a trigger, and they're going to reshort when price nears a higher time frame trigger. And momentum-based algos will jump into the trade once price breaks above a big trigger. FOMO will jump into the trade, retail buying once price breaks above a big trigger. So the triggers will help dictate price action, and that's the only thing that I found reliable when it comes to GME. So we can see a strong breakout above the daily trigger early on Thursday morning, and this led to a really nice move right up to the weekly trigger, which is what we were targeting. And then surprisingly, which I didn't expect, you could see the shaded area here that represents that the weekly trigger is very likely to provide resistance. And in fact, it has provided resistance in the past, most of the time. Let's do the 15-minute. Whoops. So, we had a strong move up here that was rejected by the weekly trigger. You can see the shaded area represented that rejection is most likely. And here again, we had a brutal rejection of the weekly trigger. The shaded area showed that rejection was most likely. And I was expecting the same thing here, but the velocity behind the move, as you can see in the shaded region of the hourly trigger, was extremely strong. And, even shown on the 5-minute trigger, just how strong that velocity was. And when price came up to the weekly trigger, normally, even if price is going to break above, there's going to be a really strong battleground here that could last like a few days as bears tried to hold it below the weekly trigger and bulls try to push it above. And surprisingly, GME was able to just pop right above it with almost no resistance, back tested it right here, and then was off to the races. And you'll notice that at the end of the day, it did start to catch resistance once it neared the shaded region of the monthly trigger. The shaded region is kind of just showing where price is likely to find resistance, and you can see, this was calculated well beforehand. Price wicked up into the shaded region and then rejected. So where do we go from here? Now, unfortunately, in my humble opinion, and I'm not someone that should just be blindly trusted, but just from what I've seen before with the GME, in all likelihood, the monthly trigger is not going to be a point where price will just break above. Even though price was able to break above the weekly trigger, the monthly trigger is kind of the short's last stand, if you want to call it like that. So if you zoom out on the chart, you'll notice that there have been even stronger moves than we saw here. For example, this was just an insane move higher that ended up rejecting the monthly trigger. This was a really huge gap up on a stronger earnings, rejected the monthly trigger. Even here, again, after the earnings gap down, it's a really powerful move, but rejected the monthly trigger. And what's so important to understand if you're invested in GME is that once price reclaims the monthly trigger and the hourly trigger and the daily trigger and the weekly trigger get above the monthly trigger, which will confirm the breakout, that is when we will have our real squeeze. And it's not just me making this up. If you look in the past, monthly trigger breakouts are extremely powerful. We had one here, one here. I could show you hundreds of other stocks that show also just how powerful monthly trigger breakouts are. Any stock that's made a huge move in the past that you can think of, AMC, BBBY, etc., all of these moves started when price broke above the monthly trigger. So should price break above the monthly trigger and confirm the breakout by getting these bullish crossovers, we will finally expect GME to roar back to all-time highs. A couple of reasons for that. One is that once price breaks above the monthly trigger, many funds will give up on their short as they know that now momentum-based algos are going to jump in and long the trade. And this is the emotional price point where retail is going to start FOMO buying in droves and bringing price up further. And so they'll cover before that happens, because instead of why cover at 30 if they can just cover once price breaks above the monthly trigger, as they know where price is going anyway. And the third reason is what I just stated. You'll have a lot of momentum-based algorithms that will start to long the stock once it breaks above this crucial price point, the monthly trigger at 20, and retail FOMO will start to kick in because this is the emotional price point where human nature just simply can't hold themselves back from starting to FOMO into the trade. Besides the lucky few that have somehow mastered their human emotions, I'm not there yet. Don't know if I'll ever be. But in all likelihood, the first try, the second try, the third try will probably end with a rejection. Now, the best case scenario, what we would want to see, unfortunately, it's early in the month. It's the 5th of May. And if GME attacks the monthly trigger right now, velocity is really still strong to the downside. So it would be hard to break above the monthly trigger on the first go. And you can see, if we zoom back into the daily trigger, you'll notice that on the first attempt to break out of the daily trigger, which was right here, you'll see that the daily trigger was shaded, meaning that there's going to be strong resistance here. You can see how strong the downside velocity was on the daily trigger, and when price came up to it, that's why it was rejected on the first try. But on the second try, you can see that the daily trigger wasn't even lighting up anymore, which means that there's no longer any resistance at the daily trigger and price will break above. And what happened was very simple. Because price was able to come up here and then drift a little bit lower than the daily trigger, velocity, negative velocity, started to recede. And once it got really, really low, price was able to break above. Same thing with the monthly trigger. Currently, for the month of May, we have really strong downside negative monthly velocity. But if GME can pin in this range right here, so let's call it, I think this is a good area to represent it. And where's the end of May? I still got a ways to go. So, all right, something like this to the 31st. If GME can at least survive in this range. Now, if it gets a monthly trigger breakout, wonderful. I wouldn't trust it because I think it could still get brought back down with this strong negative monthly velocity. But if GME can pin in this range for the rest of the month, even if it dips back down, etc., just range bound, even if it comes down here, even if we do something like this, strong pullback, and just bounce in this range, if GME can just end the month anywhere, I would say probably above 16, then for the next month, for the month of June, the monthly velocity will become much less negative. And just like with the daily trigger, where price rejected the first try because daily velocity was strong negative, but was able to break above the second try because price was able to pin in this range while daily velocity became less and less negative, we'll have the same thing with the monthly trigger, where price can just survive in this range for the month. Then coming into June, the monthly velocity will be much less negative, allowing for price to actually break above the monthly trigger. So all in all, to summarize, I do not think that this move will be able to break above the monthly trigger and ignite a short squeeze just yet. I think that the negative monthly velocity is too strong currently at the moment. I think the best case scenario that we can see for GME is price surviving above the weekly trigger for the month of May. I want to see the hourly trigger cross above the weekly trigger. I want to see the daily trigger cross above the weekly trigger. And if GME can survive in that box that we showed for the month of May, I really think it sets up a break above the monthly trigger for the month ahead. As for right now at the moment, I think GME has run into extremely significant resistance at this area. I think that it might have to do some, a little bit of pullback, a little bit of choppiness while the hourly and the daily trigger catch up to price. Whenever price is this far removed from the daily trigger, from the hourly trigger, it's 32%, or sorry, it's going to be a little less, but whenever price, gets 30% away from the hourly trigger, even in short squeezes, you're going to see price, either drift sideways or pull back while the hourly trigger comes up to reset velocity for the next move higher. So all in all, it's likely that we'll have some sort of pullback, some sort of choppiness throughout the next coming weeks. But I do think that as long as GME can survive in this range and close close the month of May as close to the monthly trigger as possible, this negative monthly velocity will be gone, and that sets up for a major breakout in the month of May, in the month of June, or possibly July. This is extremely constructive. I don't think the stock is ready to squeeze just yet, but I do hope that GME can survive this range and break above the monthly trigger next month. Everybody that holds GME should understand that 20.11 is the final breaking point. It's not a pennant, it's not the triangle or Dorito or whatever the folks are saying these days. It's just a monthly trigger. They need to overcomplicate things. In the past, it'll work again once price breaks above the monthly trigger and is able to get some bullish crossovers to confirm the breakout. That's when GME will finally begin its short squeeze. If you enjoyed this video, I would greatly appreciate it if you could like or share this video because I am trying to regain my presence on Twitter, and any like, any share on the tweet, on the video will greatly help me. Thank you guys and enjoy your weekends.